Welcome to our analysis of the comprehensive tariff implementation that began in early 2025 and the dramatic market response that followed. For this research, we've utilized artificial intelligence to assist us in searching through extensive data sources, consolidating information, and summarizing the complex timeline of events. Today, we'll examine the key developments of what economists have described as an unprecedented series of trade policy changes that sent shockwaves through global markets and created extraordinary volatility in financial markets. The foundation was established on November 5, 2024, with the presidential election results. The campaign had featured extensive promises to use tariffs as a primary tool for trade negotiations and economic policy. On January 20, 2025, the inauguration ceremony included pledges to immediately begin the overhaul of the trade system to protect American workers and families. These weren't merely ceremonial words, concrete policy actions would follow within days. Just days into the new term, February 1st marked the signing of 3 executive orders imposing significant tariffs. The measures included 25% tariffs on most goods from Mexico and Canada, and 10% tariffs on Chinese imports, officially designated as security-related measures tied to border enforcement. Financial markets immediately responded with heightened uncertainty and increased volatility as investors began calculating the potential economic impact of these sweeping trade policy changes. March witnessed rapid policy escalation. By March 4th, tariffs on Canada and Mexico were fully implemented despite initial delays, while Chinese tariff rates increased to 20%. The pace accelerated on March 12th, when a 25% import tax on all steel and aluminum entering the United States took effect. These developments triggered substantial declines in U.S. equity markets as investors adjusted their medium-term earnings expectations downward in response to the rising trade barriers and increased cost pressures on American businesses. April 2nd marked a pivotal escalation with the announcement of a minimum 10% universal tariff on all U.S. imports, accompanied by higher tariffs ranging from 11% to 50% on imports from 57 specific countries. This represented the most comprehensive trade policy shift in decades. The market response was immediate and unprecedented. The following 2 trading days witnessed the worst 2-day loss in U.S. stock market history, with $6.6 trillion in market value eliminated before markets closed for the weekend. The S&P 500 briefly entered bear market territory, declining more than 20% from its February peak, as investors grappled with the implications of the sweeping trade policy changes. April 9th brought further drama as higher country-specific tariffs briefly took effect, including combined tariff rates reaching 145% on certain Chinese goods, sending markets plunging deeper. However, within hours, the administration announced a 90-day pause on reciprocal tariffs for all countries except China, citing concerns over market stability. The 10% minimum universal tariff remained in place. This partial policy reversal triggered the strongest single-day market performance since 2008, with the S&P 500 surging 9.5% in one session, a textbook example of policy-driven market volatility during periods of trade uncertainty. Late April continued to feature policy adjustments and corresponding market volatility. April 11th brought exemptions for certain electronics categories. By April 21st, major U.S. retailers issued warnings that the escalating trade measures would result in visible price increases and potential product shortages within 2 weeks. Markets continued to fluctuate with each policy announcement, making April 2025 one of the most volatile months for equity markets in recent memory. The turning point arrived on May 12th when the United States and China announced a preliminary agreement to reduce bilateral tariffs for a 90-day period. U.S. tariffs on most Chinese goods dropped to 30%, while China lowered its tariffs on U.S. imports to 10%. This development sparked renewed optimism for a comprehensive trade resolution and significantly reduced recession concerns among economists and investors. Markets responded enthusiastically, with the S&P 500 surging more than 13% from its April lows, nearly recovering to pre-crisis levels. As of mid-May 2025, active trade negotiations continue with various international partners, with the stated goal of reducing tariffs while maintaining the 10% universal tariff as a permanent policy framework. The events of early 2025 demonstrate how rapidly trade policy shifts can reshape financial markets and economic projections. In our next analysis, we will examine the technical market indicators and trading patterns that emerged during this period of extraordinary volatility.